is my question. ये प्रॉब्लम अगर ग्लोबल है तो लोकल मार्केट्स अंडर परफॉर्म क्यों कर रहे हैं?
Hi, good morning. I think we've seen by and large always that whenever the global underperforms, we always tend to underperform. And let's not forget that in last year we outperformed vis-a-vis the global markets, and we continue to trade at premium. So I think if you look at it, when we started this year in Jan, the trade for the most of the institutional investors was sell in India and move to China, and the Chinese markets saw good rally. Now again, the trade has started reversing. So I think slowly and steadily we will see that comeback in Indian markets, and most importantly, when we see the market discounts the future things. So we've been seeing that IT, what has happened, or banking also, when you have a global crisis, the local things remain very strong and intact. So I feel that this is a near-term in nature. So when we start Q4 earnings start coming from the second week of April or so, and maybe the quarterly updates from the most of the financial companies. So then we will see some that the rallies coming back to the markets, and we'll see the upsides again starting flowing into it. So I think near term this remains always a challenge whenever we see a global wherever there's a problem, and we tend to underperform, and then maybe the things will start.
There's a report coming from Emphasis, no exposure to Silvergate Capital either as a client or as a banker. And this is, almost all the IT companies have come out and have said that, look, we don't have a direct or indirect association or a business relationship with any of the banks where, in a sense, right now, there have been asset liability mismatches, whether it is Signature Bank or SVB. I'm not so sure what the Credit Suisse connection is. Frankly, Anisha, nobody has come out and has said that, look, I've got no connection with Credit Suisse or UBS.
Because they
all have connections
with
there,
and Deutsche Bank, so they can't say that. But at least it's getting cleared up with the UBS takeover. So I don't think
business will slow down, Anisha.
Yeah,
See, when a
BFSI
takeover happens, the staff would be merged, processes would be merged, and that's an ongoing process. So UBS tech team and when the Credit Suisse tech team, they would come together, there would be similarities and there would be platform interlinking. That's a complete process.
Yeah.
What happened after Lehman, you have to realize that the IT industry went into a contraction mode. So IT spending was cut down. Right now the IT spending may not be cut down, but everybody in a sense who was happy to pay that extra dollar to to outsource much more, because 3 years of total technology adaptation had to happen in 1 year. 1 year had to happen in 3 months. 3 months had to happen in 7 days. All that is over.
Yeah.
Just think about it. A year ago we were talking about moonlighting. Now we're talking about layoff. How the world has changed. And why do we blame commodity companies for being cyclical? Just think about IT companies who are in the business of running artificial intelligence. They're not able to predict their own models. From moonlighting to layoffs, what's going on?
Yeah, I know, from that
And when the
mass
sun is not-
resignations to
Exactly.
mass layoffs is what has happened in a short cycle of less than 12 months. I mean, the cycles itself are getting so narrower. So, yeah, very
They
interesting.
overcommitted, Anisha. I think they overcommitted.
They had
Everybody got wrong. Everybody got wrong in terms of understanding the whole IT cycle. And it's only when the sun is shining bright we talk about moonlighting. When the sun is going down, nobody talks about moonlighting.
Oh, well, yes, and that's what BofA Securities is actually also saying on Q4 of the IT companies. They're saying it's going to be pointing towards an incremental slowdown. Uncertainty levels are quite high when it comes to financial services and high tech, and that's one thing that they're going to watch out for. It's going to be a soft quarter for Tech Mahindra and Wipro, and that's why they have an underperform rating on the same. However, as far as HCL is concerned, they are positive, given the entire risk-reward play, and neutral on TCS and Infosys. Company-wise, they say TCS, the decent momentum will continue. So they're not worried there. They're worried about Tech Mahindra because it has high exposure to telecom, high-tech, BFSI. All of the three verticals have been coming under pressure. Wipro, wherein they are expecting that the revenue growth could be towards the lower end of the guided band. And for Infosys as well, BFSI vertical is something that they believe is going to point to a slowdown. Rahul, your take on the IT sector as a whole? Is it time to probably deploy if you're a long-term investor, or probably there are better levels coming, so just wait and keep your powder dry?
I think the most important thing, if you look at in IT companies, is I think obviously their focus, obviously the customer remains with on a BFSI segment. And whenever we see a slowdown over there, obviously the IT earnings is going to get impacted. So if you talk about the short-term momentum, and when we had the channel checks with most of the large and mid-size of IT companies, obviously remains that first half would remain a challenging for the most of the IT companies. But the structural demand remains strong. So if you ask me that first 2 quarters, yes, it might remain slow, and maybe the third and the fourth quarter, the demand and the things should be back on track. So if you ask me the prices and the stocks which have fallen in last 1 year and so TCS, Infosys, HCL Tech remain a strong bet from our side in this kind of an environment. And just to give you a perspective, in this kind of fall, if we see when the markets have fallen 5-6% from the near term, and where we see the IT sectors just falling 2% over the indices wise. Now, if we get TCS and Infosys at 20 times earnings, and the company with ROE of 47% for TCS and 38% for Infy, then I think this remains a pretty decent bet for a long-term investor. Yes, the near term might be challenging, but I think if you look a little bit longer horizon, then yes, all this large cap plays looks very attractive from here.
FIs have turned net buyers, domestic institutional investors are net buyers, global markets are solid. तो भाई बेच कौन रहा है? That's a question I ask everybody. Who is the seller? Motilal Oswal is not a seller. See, Motilal Oswal is not a seller, I know it.
So I feel most important thing is, I think if you look at it last 3 months, if you look at or maybe a little bit longer. So we have seen that I think the mid-size segment, mid-caps have been underperformed. And I think the basic market strength was also from the retail side. And I think the retail has seen some kind of an impact, and that volumes have shifted more towards the option side. So I think that's one of the thing where we feel that I think still the time the markets have that broad base or a bull market kind of a rally, the markets might remain a slack. And after a fearful selling, if we look at it, and same just to give a perspective, 8% sell-off in or 8% plus sell-off in the banking index, which was a star performer in last 2 quarters if you look at it. PSU banks, which have fallen an average 15 to 20% and more in some cases from their recent times. So I think where the structural flow was, and from there where we saw kind of a sell-off, I think this is what we need to understand that. So I think in near term, I think it's just a time-wise. We have to look at it. I think, as I said, that in it maybe a couple of weeks later when we see the earnings coming back, so I think then people will realize, and then we'll see some kind of momentum again picking up in the markets.
I wanted your take regarding the Adani Group of companies. So yesterday, of course, there was that knee-jerk reaction. Today, there's a clarification from the company. But structurally and fundamentally speaking, would you be a buyer or at least recommend a buy on the likes of, let's say, Adani Ports, ACC, Ambuja, some of these better companies with stronger balance sheets?
Officially, we don't cover obviously the Adani as a group, but I think yes, as you mentioned, that I think ACC and Ambuja, if you ask me, but I think Ambuja remains a strong back in the entire cement sector, one of the preferred pick in the cement sector. And if you look at it, that Q3 and Q4 are usually the better times for the cement companies. So I think the numbers were decent in Q3 for Ambuja. I think Q4 also, as we do the channel checks, I think the cement should remain stronger in Q4 as well. And then we see the oil prices cooling off, cooking price coming down. So I think this will help them into increasing the margins. And most importantly, if they look at it, the prices are not corrected. So I think this will augur well for their margin as well. So I think if you have to look at it in this crisis, if we can get, then I think Ambuja remains a preferred bet among the entire Adani basket.
Okay. Now what we've been looking at is the fact that 4 months, it's very rare that markets have fallen for 4 months on the trot. Let's look at instances in this decade and in the previous decade. What have been the instances where Nifty has fallen for 4 months on the trot? Now remember, 4 months on the trot, down, 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 down. It has rarely happened. But it has happened in 1996, really? It has happened in 1998. It has happened in 2001. What happened in 2001? 9/11. There was 9/11. And then obviously markets would fall. But the problem is that when markets have fallen for 4 months on the trot now, it has been largely because of global financial crisis. It is largely because of a real collapse of the system. Even in COVID, markets did not fall for 4 months on the trot now. Then the next instance is 2001 when markets fell for 4 months on the trot. That's also because of the TMT bubble which got pricked, and you had 9/11. So there were serious global crises when markets have fallen for more than 3 months. And Rahul, that is my point. Our market's telling us something. I'm not sounding bearish, I'm not trying to raise an alarm bell here, but data is data. When markets have fallen historically for 4 months on the trot now, that is only because of a global event like a 9/11 or a TMT bubble. Markets have not fallen 4 months on the trot now, even in 2020 when the COVID crisis had hit us.
Correct. You rightly pointed out. I think the data suggests what your the data is right and it is not wrong. And I think obviously you've done a good research on this. So my sense is that I think obviously we've seen a global crisis in terms of the banking universe in the globe. But I think most importantly, if you look at, they have resolved also very quick. It's not been a saga like Lehman or something which was dead for a while and then it came up. And secondly, most importantly, if you look at it, the kind of leverage what we had in 2008 in the balance sheet of the all those banks, and if we compare, they were like, say, for just to give a perspective, even the leverage was 1:30 or something kind of that. And when we compare here right now, the leverage is pretty low. So I feel that things have sorted. And I think it takes time to get back the confidence into the markets. So I feel that obviously the sectors which has which has we've seen a sell off, and plus secondly, what most important is, I think, the fear in the mind of the investors if we look at it, and when we have seen that in past in such kind of way the markets have tumbled more than 25-30% on index side post such kind of an event. So I think that fear in the mind which is dragging it down. And then if we look at it, when we talk about it, that banking crisis came in this last 1 month, 1.5. Before that, during the budget time, we had a crisis because of the Adani stocks selling, and because of that, I think we've seen a decent sell-off in the entire market. So I think these are also, a couple of things which we have to remain as a local, not a global. So I feel that things will sort it out as we see and as the time sort it.
Okay, that's the word coming in as far as where the market setup is and what the fourth month decline could likely mean for the markets going forward. But today there's